Mike, good afternoon.
Alexander, thanks for having me on, man. I'm
Uh,
excited to chat
I'm
with you
ex-
about entrepreneurship.
yeah, I was just listening actually to a podcast you did with someone else, so I kind of learned a little bit about what you do and how you do it. But Mike, for those of us out there who haven't heard your story yet, why don't you tell us a little bit about who you are, what you've been up to over the last couple of years, and then I'd like to go back to the beginning, hear about your corporate America days, and catch us all the way up to the present time.
Yeah, you bet. Love to. So, yeah, at the current moment, probably 90% of our life is land flipping. And it is truly the simplistic model of buying property, vacant land, no structures or anything, under market value.
Mm-hmm.
So we buy with a margin and then we just turn around and resell it. And
Mm-hmm.
that's we've been doing that for we're going on our 10th year here at the beginning of the year. That's pretty much what we do for the last couple of years. We've been coaching others to do the same thing and transform their lives like we do. We dabble in some other real estate ventures, multifamily syndications, a little bit of single family. I mean, but it's just been a great it's been a great outlet and a lifestyle generator. I mean, you can't really beat it. So that's kind of what occupies me vocationally. Personally, we live in the mountains, Colorado. Enjoy being outside, nature, going out for runs and bikes and hikes and all that good stuff. So that's the quick nutshell of what my life consists of today. We can certainly rewind and unpack any and all of that.
So explain to us what this land kind of flipping is.
Mm-hmm.
What does that mean, right? Most people I know, they understand, oh, I'm a landlord, I own a building and I have tenants in there. And then some of my friends, they would get like, I'm a flipper, oh, you're a rehabber, got it. Then you get to these weird, deal wholesaling and things like that and syndication, right? But maybe just explain to me what is land flipping? Give me the
Yeah, it is.
101.
It's a bit unusual in terms of uh, you hear and see on your streaming platforms or whatever all the sexier real estate models. So I think a lot of people are familiar with that. Land flipping is really as simple as I described it. So we are going and we're identifying a market. We are identifying who the vacant land owners are in that market or the submarket that we want to be targeting.
Okay.
We make them direct offers off market. So these are not listed properties. These are just people that own land, and we make an unsolicited under market offer. Our business model is to make them an offer. So let's just say, for instance, they have a property that's worth $50,000 market value. We'll come in and make them an offer of 25 or 20 or something, you know, 50 cents on the dollar or lower,
Mm-hmm.
and we'll make them an offer. And it is really a statistical game that 1% to 3% of the people you reach out to, or this is the target state, will accept the offer. And there's various reasons that people don't want their land anymore.
Mm-hmm.
They've gotten divorced, or they inherited it and they don't want to pay the property taxes, or they had a dream 25 years ago. They've been paying on this property and they just aren't going to do it. Or, there's a handful of reasons that people are motivated to part with their land. They need cash. We pay cash for land. And so we acquire properties under market value. It's not always 50%, but it's some healthy margin that we're
Mm-hmm.
comfortable doing. And in that way, we can turn around in the same minute and resell that property because we have a profit margin baked in.
Mm-hmm.
So we're not adding value. We're not subdividing or entitling or building or developing or doing any of that. We're simply remarketing it it can be at market value. When we have a margin, you can go below market value. And then we typically sell properties broadly in one of two ways. There's, as you would expect, just a cash transaction. We advertise that same property for, let's say, $45,000, and somebody comes with money and says they either have financing behind them or money, and we do a cash transaction, and we trade them the deed for the money.
Mm-hmm.
The other way that we have done probably 85 to 90% of our deals is we will owner finance that property. So if you want to buy the property for, let's say it's listed at cash for 45,000, well, maybe we'll finance that over 5, 6, 7 years. You make the monthly payments to us, and in total, after 7 years, let's say, maybe you've paid 70,000 on that piece of property, and we're the bank in that situation.
Mm-hmm.
And so we stack up promissory notes is essentially the financial vehicle that people buy that on. They promise to pay us a certain amount over time, and we have stacked those up such that we have a monthly recurring revenue that comes in from essentially mailbox type money. Like,
Mm.
a lot of people familiar with real estate have rent payments or whatever. Ours is, financing for land. And so, we have a healthy income that comes in monthly in addition to new deals that we do on the regular. And so, it's just a comfortable way that I like to do the business, because I like to know I have for 5 years out, I have a certain amount of income that's going to be coming in. Kind of frees up my time to explore coaching or explore other entrepreneurship ventures that I want to go into. And so that's kind of broadly the business model. There's obviously nuance in every phase in terms of how you do the things or what the most successful techniques are. But that kind of gives a flavor for what we're doing in the land space.
I have a lot of questions about that particular um, field of real estate, but take me back. How did you get started in land flipping? Because I didn't even know land flipping was a thing until we started going through your work.
Right.
How did you find out about it? And you said you've been doing this 10 years, but I know you
Mm-hmm.
had a long corporate career prior to that.
Yeah, my early days were, at least back then, that was kind of the normal American path. I went to university, got a degree, joined the W-2 workforce. At the time, I was working for Motorola, which was really big into consumer electronics.
The kids
And
won't know about that one. Yeah.
yeah, I date myself very
Yeah.
much there, but they're still around.
Yeah.
But
Yeah.
anyway,
They're
they
not
were high tech.
making, are they still making like cell phones?
Not, I think they do have some branded cell phones. I don't know if they make them or not, but they're into some electronics.
The Motorola Razor, man. If you had a Motorola Razor when I was a kid, you were the coolest kid in class.
Yeah, they definitely took a bit of market share there. But companies like that, I was with Motorola. I pivoted into Nokia for a little bit, and I finished my career with Microsoft. And so I spent, I don't know, 20, 25 years in corporate America. I was in operations and supply chain, so I was really not doing the design, but I was doing some of the manufacturing, the supply chain that distributed the products, some of the reverse logistics that came
Mm-hmm.
back. And that was my path. I was climbing the corporate ladder, working ungodly number of hours a week. Late in my career, it was an always on environment, right? You have cell phones, email, people are able to get to you all the time. And so in 2016, well, maybe I'll back up just a little bit before that. So in the early 2010 area, like maybe 2012, 13, I revisited Rich Dad, Poor Dad, which a lot of people are familiar with in real estate. But,
Mm-hmm.
it awakened this concept of, there are broadly two camps, but he has a cash flow quadrant where you're either earning with time for money type activities, or you're in entrepreneurship. And even in entrepreneurship, right, you can trade your time for money, or you can run a business.
Mm-hmm.
And so it awakened this concept of, I need to really start looking at how do I shift my income and build alternative streams of income. And so in that process, I started doing things like this. I was listening to podcasts that were talking about side hustles, entrepreneurship. And in that process, I heard two different people on two different podcasts talking about land flipping. And it just sounded almost too good to be true, but they were talking about how, there was a low barrier to entry. You can buy properties for a few hundreds of dollars or a few $1,000s, all the way up to what most people think of as like hundreds or thousands of dollars or millions. But there's a vast amount of land out there that's really approachable.
Mm-hmm. Mm-hmm.
And they were making triple and quadruple their money. Like they would buy a property for 2,000, sell it for 8.
Mm-hmm.
If they owner finance it, even more. And so it really sparked an interest, enough so that I just started doing some research. I bought a toolkit that explained a bit more about how to run the business. But I was working at the time. And so it sat on the desk and collected dust until in 2016, I got let go from Microsoft. And at the almost the same time, my wife got let go from her company. And so we were like without a job. We had no other income. And so we were without an income. And the knee-jerk reaction is go get a job. And I started that process and was interviewing with other high-tech companies, Amazon, Apple, Tesla, all West Coast-based companies, though. I was living in Dallas, Fort Worth at the time, and we just really didn't want to move, especially for work and in that direction. And so, my wife, super supportive, and she really could feel my angst in this whole process. And she just said, why don't we slow things down? And we decided to think about, what do we want our lives to look like? What do we want? And we wanted to spend more time together. We had worked together in the past. It's how we met and kind of came together. But, we enjoyed spending time together. And we thought, if we could do that more, if we could travel, if we could be a bit more untethered. And so that led us back to land. And we just said, let's give this a go. And so we set 12-month time horizon. We put some seed capital into the business and we just said, look, let's give it a shot. We found a coach and a mentor and we ramped up our business. And, we were skeptical at first, like almost everybody we talk to now that we coach come in with some skepticism. But, that first deal, when you double your money or better, it just really sparks the motivation and enthusiasm. And so, that was our journey. And I'm an operations guy. So we really set business targets. First step was let's stop spending out of savings. Next stop is let's replace our salary. Next stop is let's grow, double what we're doing. And so we've just grown every year since then. And it's been an amazing journey and lifestyle. And, it's just something I couldn't have dreamt of pre 2016.
What do you think? Where do you think you'd be if you hadn't have lost your job?
That's a great question. I honestly, my personality type is very loyal and very safe, let's say. I would say, especially in those days, like I defined safety as a corporate job, benefits, a salary, getting that 3% raise, or if you're lucky, it just, and even when I was in my early corporate days, when I started with Motorola, Dell Computers started, and I was working in Central Texas, like just south of Austin is kind of where I was. And, Dell opened up and they started growing like gangbusters. And all of my engineer colleagues just immediately got jobs over at Dell.
Left and went to
and
Dell.
I was so fearful of, oh, I can't switch. What if, well, I don't know. And so I likely would still be grinding out, feeding my 401k, scared to death that the stock market's going to tank and 90% of my 401k value is going to go down with it. I might have a side hustle, but even back in those days, like I'm 110% in whatever venture I'm in. I was giving my all to Microsoft. I was traveling 50% of the month. I had an international team, and I just really didn't have the bandwidth or that's not true. I didn't take the bandwidth to carve something out. I was funneling it into a different path. And so I likely would just still be hoping to God that I wasn't part of a layoff and trying to dodge, the axe as it swings, which it is in big tech. I mean, now it's AI, right? I mean, everything's getting retooled. And so, you're lucky if you can stay. And I have been fortunate in my career that I always had the foresight to kind of see where the landscape was going. When I was in Nokia running operations, I could see this offshoring movement that was coming. Our factory that we had high cost labor doing, manufacturing was shifting to Mexico at the time. And, so I got a regional job and then I got more of a global job. And so, I was kind of able and nimble to do that, but you can only do it for so long. At least 95% of us, because, at some point the cost cutting kind of comes in there. But yeah, it really shifted my mindset when we took the leap in how I viewed safety. Like, I looking back, entrepreneurship is not without its ups and downs, but I'm almost in total control. Like I can grind more. I can use my resources more wisely and hire the right people. I can, adopt different strategies. I can pivot. I can do all the things. I can grow my income 5,000% if I want to, rather than, hope I'm going to get that 2.5% raise or something. But it's a totally different mindset now versus then.
Yeah. Well, have you heard of the region beta paradox?
No.
So the region beta paradox is basically where you were. Like, so you could be in a relationship, you could be in a crappy apartment, you could be in a crappy job. But if that is just good enough that you're like, yeah, like I don't love my job, but it's not a bad job.
Right.
There's some good stuff. I like the people I work with. The office is cool. Like you don't end up a girlfriend, boyfriend, wife, husband, you don't end up leaving that thing because it's not worse. So like you would actually be better off if the job was terrible and your boss just like
Sure. Yeah.
screamed
I'm miserable.
expletives
Yeah.
at you, and then you would leave. And the same thing is true with like certain things, like if if you and me had to go somewhere that's a mile down the road, or let's say a half a mile, we would probably just walk, right? But we'd actually get there slower than if we
Yeah.
drove and it was a mile away. So
Sure.
because it's closer, we actually move slower. So just kind of that weird region where it's not
Yeah.
bad
Region
enough.
beta paradox. All
You don't
right.
feel the pain. Yeah, and that kind of sounds a lot like where you were during that
Yeah.
period of
I
time.
was definitely just happy incrementing a little bit there. So
So you leave. Well,
I
you are
left.
shown the
Yes.
door. Yes, you're shown the door.
Involuntarily.
Yep, yep. And a similar time as your wife. Now, how do you decide on this particular field? It sounds like, I don't want to say it was a little bit lucky, but you heard it and you're like, oh, that
Mhm.
sounds cool. Um, and you just commit to that. Were there other
Mhm.
things that you considered at that point in time?
Other than getting back into the workforce, it really wasn't. I mean, we had
It
it
was land
like
flipping, or it was
kind of, yeah. I mean,
workforce. Okay.
we had it at our fingertips. Um, Literally, I mean, I had the toolkit. It came with, a weekend boot camp, they called it, where you could get a little bit more, and so we did that, and we just decided to take the plunge. And yeah, we really didn't look at other. It would have been a great time, most likely. I mean, real estate was having a moment between 2011 and even still. There's some, but yeah, there really wasn't much thinking about. And back in that time frame, I mean, it wasn't too long ago, but in terms of business, it really was. Like, it wasn't like today where you have gig economy and you have all these online digital businesses and different opportunities in that way. This just seemed something that was, as I mentioned, a low barrier to entry. We could test the waters. It wasn't a $50,000 down payment for a house, or $100,000 syndication investment, or things like that. It was okay. We can get in, we can try a few deals, we can see if it works, and go. And after we had that first bit of success, we thought, okay, this has the potential to really fuel a life and a lifestyle. And yeah, we just kind of never looked back. And so it wasn't. We just really didn't. And this is not my personality. My personality is really to look broadly and try a bunch of different things or whatever. But this one was there. It had potential, and we just took action.
Hmm. So, is one of the reasons why this felt so attractive was because you could do a small deal first, like a $2,000 or $5,000 deal, and that's not going to break the bank. You don't have to buy
Yeah.
like a condo complex, and it's like,
Right.
well, that's just not realistic for me right now.
Yeah, exactly. And also, had been doing a bit of research, and in the real estate space, like if you think about rentals, a lot of people at the time were talking about, doing these rentals, but what's your net positive cash flow on a month to month basis? It may be $100, or maybe it's $500. And so to stack up enough homes to get enough income, let's say $10,000 a month, just use round figures. I mean, you have to stack up a lot of houses, and
Hmm.
that can be done with if you use the right leverage, but there's also a lot of risk that comes with that. And so it really, for the risk versus ROI, was a no brainer.
So you were thinking a lot more about cash flow than like buy it, flip it, make the
Definitely.
big profit, because that's
Yeah,
what I
we have.
think most of the. So I have a couple rentals. It's not a big part of what I do, but I'm with you. Yeah, I don't have like a huge margin there, but my brain is that I'm making a little bit each month. The mortgage is getting paid down, and the value of this is going up. So now I bought a house for 113 grand, and now Zillow tells me it's worth like 260.
Right.
So even if I'm break even, I'm like, okay, so every month I mean, I don't know. I bought it in 2017, so you can do the math. It's like
Yeah.
I'm basically going up like $1,000 a month in value.
Yeah, exactly. I mean, and we do the same now. I mean, we have a breadth of real estate options, and land is a great cash flow engine for us, and it allows us to put that into other assets that are longer term assets. Just to your point, I mean, you can buy and hold and get appreciation while you're also getting revenue in, and down the road, you have a lot of equity built up that you can do something with. You can HELOC, you can liquidate, or you can just hold and let that be your annuity later in life as you're bringing in mortgage-free income. So yeah, I mean, we now do all of that, but back in that time period, we needed income, And this for us was a great income source opportunity.
All right, so tell me about the first deal. What did you find? What was the gem out there that really had you go, I gotta buy this thing?
Yeah. So this was for us. This was a journey. Like our first. So our first foray into land, and the first thing that you really have to do is find your market.
Okay.
And for us, it took us 5 or 6 missteps, I would say, to find a market that works.
Okay.
We had a coach, but our coach was very clinical, very operational. He wasn't really giving us much guidance in that way. And so, like our first market, so we lived in Dallas at the time, like I said. And there's an adage in real estate that some may or may not be familiar with, but in traditional real estate, a lot of people say, invest in your backyard or someplace that's you can get to in a certain amount of time, or where you have boots on the ground if you have a partner or somebody that can access properties. And so
Makes
we were
sense
thinking,
to
okay,
me. Yeah.
yeah. And so we kind of had the same philosophy. And so we started looking at it a little bit in the broader Northeast Texas market. And, one of our first campaigns, which is mailers, we send out, 1,000 direct mail letters.
Are they all
We got
unique, or they're all the exact same? We buy houses for cash, that kind of thing.
ours are unique. And
Okay.
so we get a list of property owners. We send John Smith a letter. Hey, I see you own 10 acres here. We'd love to make you an offer of $1,000 or $10,000 or whatever.
Okay, so
And
you're saying, property address and the amount you're willing to offer potentially.
Yeah, ours are very specific and tailored. And there's different approaches in this way. Like some people like to do the generic, hey, I see you own property. I'd love, or would you ever entertain selling?
Because you can do more potentially.
Yeah, you get a better response rate. The issue is that those people are anchored typically at the market value, or they think, great, I'm going to get a good deal on my property or whatever. And then when you come in and lowball them, they're pissed off, or they're like, screw that.
So you've already started the process by giving them the offer.
Yeah. So we get a less of a response rate, but the people know what kind of ballpark we're talking about. So they may want to negotiate a little bit, but they're not going full market value or something. And so we sent out that first campaign and we got a bunch of responses back, and we were like,
in the Dallas, Texas area,
in the Northeast Texas area. This was really a county, really on the Louisiana, East Texas border.
And a question before you go further: what is this like land? What does it look like out for these people? Is this just like ranch land? Is this farmland? Is this just like a guy's got a house and then he's got 40 acres attached to it? Like what is? Give me a little perspective here.
It can be any and all of that. We have a process where we help our clients identify good markets, but the fundamentals of a healthy market are a lot of land. Like, if there's one vacant parcel in a county, you don't really want to go there because your odds of getting some responses are low. And so there needs to be a lot of vacant land, a lot of landowners, but it can be anything. It can be a subdivided neighborhood that's not built out, that has, infill lots. It can be ranch land. It can be rural residential, maybe 5-10 acre parcels, 1 acre parcels that are, that aren't with a lot of infrastructure. It can really be anything. And different clients like different approaches. There just needs to be a healthy amount of it. We like to have some buying and selling activity happening. So you'd need to see some interest, right? Supply and demand. And then, it needs to hit your buy box. So some people can only afford to buy $500 or $1,000 properties. Other people can afford $25,000 or $30,000 properties. And so all these factors kind of go into honing in on a good market, or at least the way we help people find it. So in our first foray, this was out in Northeast Texas, we hit upon a region where there was a lot of really small tracts of land for people to put an RV on, or maybe camping off grid or something. It was some subdivided out, really, really small, almost unusable type portions. Anyway, we got a lot of response back. Like everybody was like, hey, take your offer. Let's go. And we thought we were in the money. And when we started doing a little bit of due diligence, then you find out, okay, there's an HOA in this area. All these people haven't been paying their HOA dues for years. The HOA, after we called, said, yeah, we're not, you buy the property, you inherit all the back dues. on top of that, there's some back taxes with the
Mm.
county, and so that was an instant no. We found a few other counties that we sent offers to, and we just didn't really have the luck that we needed. But our first deal really was out in West Texas. We sent there's just a ton of land out there. Campaigns. It was like a 10-acre tract that we got for I think $2,500. And so that was our first deal, and it took us a couple of months from start of our journey to acquire property.
Mm-hmm.
And then after that, we had some difficulty transacting. Just for us, cracking the sales nut was a bit tricky.
Mm.
And I can't point to any one thing that as to why we had challenge. We had other peers that started doing the same thing as us around the same time that we knew of, that were just selling property the first weekend, doing things like that. We just, my wife and I neither come from a sales background. It could have been the property or the channel. Sometimes different people have different success in different marketing channels. It just took us a bit, but once that happened, really the floodgates opened, and so we were buying properties in the background
Mm-hmm.
and acquiring some inventory, and once that unlock happened, then things really opened up for us. But that was our first one, and it was, in this business, as with every entrepreneurship venture, there's ups and downs, and it's really important that just like any endeavor, like ultra running, same thing. You have to have a really strong why to pull you through the adversity
Mm-hmm.
and keep you going. And so, for us, we were married to, we wanted to make it work. We didn't want to go back to corporate America, and so we had each other also to be able to cheerlead and help each other through some of the low moments in terms of when you're feeling frustrated and this isn't going to work and stuff. And so we were able to kind of withstand the turbulence until we got some successes under our belt. And it's really, it's fundamental to have that motivation to keep you going.
So in the early going, are you just buying and selling for cash, or are you still thinking cash flow at that time? Or did you have a stockpile of money, let's call it 30 grand. You go, hey, we need to make this 100 grand or 200 grand as fast as we can. So then we can kind of relax a little bit and think cash flow.
Yeah, we weren't feeling immediate pressure to pay bills today. We had, fortunately, some savings. I got a severance from being let go,
Mm-hmm.
and we put the seed money in, and we said, let's make this work for us. And so we weren't pulling out of the business.
Got it.
We were just funneling that back in. And because of that, our strategy was much more owner financing. We did some
Okay.
cash deals, early cash deals, but we were when you owner finance, if you think about a $30,000 property, somebody coming in with $30,000 versus, let's call it $350 a month, it really opens up the buying pool. Like you reach a much broader
I
market of
see.
people.
I see. Interesting. Okay. So, well, but right, can't people ostensibly still go do like a mortgage on that $30,000 land, or is that just not quite as easy to do?
It can be done, but it's not as easy to do. I mean, banks don't lend too freely on just vacant land. If you're packaging it with a building project or something, it's a little different.
Yeah.
The interest rates are higher as well for just vacant land deals. Some people don't have credit, or they don't want to. People are bank averse, and so there's a lot of reasons that it makes it a lot more attractive to be able to owner finance with people.
Okay. So then, when you're out marketing, are you marketing this as like we'll do owner financing? And is that one of the things that is bringing more people into the deal and increasing the price?
Exactly. Yeah. We typically market both, and the way we position it is a certain financing price. Let's just call it $500 a month for 60 months with some kind of a down payment.
Mm,
If you want to come with cash, we'll give you a discount off of the price. And so
I
that's a
see.
bit the way we phrase it, rather than
The other way
the
around. Hey,
property.
if you don't pay cash, price goes up.
Yeah, it's just a different framing, and we don't technically it's a no interest. It's a no interest payment with a discount for cash purchases.
I gotcha.
Kind of phrasing.
I heard you say something about that, and why do you do it that way? The interest thing. where, like you said, that there's technically no interest. I mean, I get it though, right? Like there's a discount if I pay cash, so
Yeah.
there's a premium. You can call it that if you want.
Yeah, there's more when you charge someone interest, there's just a lot more paperwork. So you file different forms. If you think about filing your taxes and you have interest payments
Oh yeah,
at the
yeah.
bank or on there's different transactions that have to happen that just complicate it and make it a little messier. And so this way it's cleaner.
And more
From
people
that
are going to
standpoint.
say, well, how much, what's my interest rate? And well, I want to pay this off early. Can you calculate
Yeah.
my value for me? And you're like,
Yes. Yeah.
I
More,
can
you have
sort of, like, I can get a calculator to do it for me. How many days,
yeah.
how many days, how many
Right.
hour, what hour do you pay it? It's crazy, right?
Right.
Um,
Yeah, and we do some of that. Like we usually offer a discount if somebody wants to pay off early. People ask us if we have prepayment penalties, and we're like, on the contrary, if you're paying off early enough, I'll incentivize you to pay off early because my cash works for me. There's a cost of capital, and I'm happy to be able to put that to work earlier than deferring it out another few years.
well, right. It's almost kind of shooting themselves in the foot if they pay it off early because right, we're not charging you interest. So you're already going to pay the fee, but then you're saying, okay, I'll give you a little discount. So
Yeah,
you're
we'll
kind of
give
meeting
people.
them in the middle at least.
Sure. Yeah, I'll incentivize it.
Interesting. Okay, so how quick do deals start flowing for you? You got that first $2,500 piece of land. Like how many pieces of land are you trying to buy? Like in what period of time?
Yeah, so we honestly we're sending out, I think at the time, maybe 200 offers a month, or sorry, a week. We just had
200 offers. Oh, okay. That's the mail
well,
offer.
yeah. So
Got
we're
it.
sending out, let's just call it 800 to 1,000 a month,
Okay.
and we're getting 2 to 3% accepted offers coming back. So maybe 20, 25 properties,
Got it.
of people saying, "Hey, I got your offer, interested to talk to you." Of those 25, maybe half work out. Like,
Okay.
so we got 10, 12 properties
Well, that's a
where
pretty high close rate once you've got a response.
yeah, it is. So, I mean, most property, there's very few things in land. It's unlike buying a house or an apartment or a duplex or something. We already know really the market value of the land. There's a few red flags we look for. One is, we don't want to buy a landlocked property, so it needs to have some legal access to it.
Right.
And then you're looking at finances, like are there a lien against the property? Are there back taxes? Any other, things? Is the deed clean? And does the person that you're dealing with have the authority and the ability to transfer the title over? And so there's really only very few things that we're looking at. For large enough deals, we'll just leverage a title company and let them do all the heavy lifting.
Okay.
And so in terms of, so we had seed capital, and our mindset was, let's get all the inventory we can. Mm-hmm. I will say, looking back, if I have one regret over our journey, is we were super picky in those early days. We were looking at property like, oh, this is kind of ugly, or
it's got too many trees. It's got too few trees.
Who's going to buy this? It's sloped, whatever. And so, but we have sold every property we've ever purchased for a healthy margin. And it's just, when I look back, I'm like, man, we passed up on so many deals that we should have just taken everything we could. But
knowing what you know now, that it probably wouldn't have been that challenging to sell.
Yeah. And so, we were a bit hesitant, but as it's probably the right thing to do. Anytime you're starting a new venture, you want to make sure you don't get too far out ahead of yourself. But yeah, our mindset was just let's allocate our capital as much as we can, because when you flip it either for cash or terms, you're making such a huge return on your investment that there was just no other alternative to do anything that lucrative with the cash flow. And so that we started January 2017. That first 6 months, I would say, was really proof of concept, getting the systems put together, getting us a repeatable cadence of activities happening, and then getting the pipeline going. And that back half of 2017, we were full speed. I mean, we were buying and selling properties, a few a month. And, by the end of 2017, if you look at our books, we weren't necessarily net positive because we were buying up a lot of inventory and we were putting money back into the business in terms of that. There's not a lot of overhead in the land business. Like, I mean, there are systems there. Obviously, you can invest in CRMs, fancy services. You don't need them,
Mm.
but there's just not so much that you can do. Anytime I see another land investor that's in trouble, it's usually because you know, they listen to the people that say, get a VA to do that, get a system to do this, before they're ready. And
Mm-hmm.
there's a place and a time for that, but you really need your cash flow happening before you overextend too much. But, for us, by the end of 2017, we had a system going. We had a steady deal flow. We had found a couple of markets that we were getting good responses from and that we liked
Mm.
from we just, it's not critical, but for us, like we were buying West Texas land or properties in the Southwest that are similar, Arizona, New Mexico. In that same year, 2017, we downsized. We sold our house in Plano. We moved to Colorado. We found a townhome that we were renting, and we kind of simplified our life such that we could ramp up a business and get things going, and not have to worry about too many moving parts, and de-risk our lives in a little bit of a way there. And so we also started transacting land in Colorado, and that's just it was pine trees, mountains, beautiful land, and so it was a lot easier for us to represent it when we talked to potential buyers. We were passionate about the land. You can feel that coming through, as opposed to just some West Texas dirt, which a lot of people love. I mean, there's a healthy market out there for people that want a lot of acreage. They don't want to be disturbed. They, want to be off the grid. It's just a different animal. But anyway, it was going into 2018. We had kind of found our stride, and it was all about just hitting those milestones and running a business and ramping it up like a business. And so that's kind of where we did.
So talk to me about how you would decide to sell a property cash versus seller finance. Because if you do 100 deals and you seller finance every single one of them, wouldn't you only be able to do like one or two deals until like next month, and then whatever, $100,000 comes in, then I can do a deal? Like, was that an issue or not? Not really.
We didn't run into the issue. I have seen people run into it, and when we
Okay.
deal with clients that we coach, that is a part of the equation, because on average, I would say we get our money back in about 10 months. So somewhere between 8 and 12 months. And so let's just say we buy a property.
Yeah. Okay. Talk me through
Let
that.
me. Yeah. So like, let's say for instance, we buy a property for 10,000, just to use round numbers.
Okay.
Well, we then would sell that for 20, just to make the math easy.
Yep.
And so we might offer that for $1,500 down or $2,000 down, with a $500 a month monthly payment, or maybe it's a $750 a month payment. And so some combination of that down payment, let's call it $2,000. Then we need to get $8,000 back. And if it's a $750 a month payment, then after about 10, 11 months, we've gotten our capital back.
Got it.
And everything after that is profit.
Okay.
And so for us, because we weren't relying on the money to live, we had kind of living expenses set aside, and we had our business income self-contained. We had a longer runway to be able to do that. But yes, I came to the same realization pretty quickly, that if you're only doing owner finance deals, your cash burn is going to go down before you get that in. But the fact of the matter is, for every 4 deals you do owner financing, 1 deal comes in cash. And it has worked out over time.
I gotcha.
That the cash coming back into the business has been able to fund us. And we've never really tapped into credit in our business. We don't really use debt or leverage or anything like that. We've always self-funded, and we've just grown every year since then. For the last 2 or 3 years, every December or January, my wife and I get together, and we're like, maybe we should, it is such a great business to be able to do it, because I mean, if you're doubling your money on a deal, you can easily absorb 10 or 15% interest. And it's very advantageous. And so for people that want to do it and have the comfort level to do it, it's a great way to go about it. I just have an aversion to getting over leveraged. We've been involved in multifamily syndications, and back a few years ago when the interest rates ran up, we were passively invested in some deals that went underwater
Mm.
because they just couldn't pay. They couldn't pay the servicing fee on the mortgage
Yeah.
because the interest rate went up so much. And so anyway, we could probably scale faster if we did tap into credit and do things in that way. And we talk about it, but it is something to watch depending on your business model. Just exactly to your point, you can burn through your cash, and then you're waiting on a cash deal to happen before you can reinvest into more deals. And we have clients that start out that are that way. They come in and they say, "Hey, I have a budget of $10,000. I want to get started." We send out their first campaign. We just had the last three clients kind of in the same boat. Like they send out a campaign, they get 10 accepted offers, and they have to then, prioritize, okay, I'm going to take these three, I'm going to work on these others. But okay, they've got a queue of properties behind them that they can either choose to partner with people or find some credit, or just tell the people to hang on and see if the deals are still around by the time they've gone full cycle on some of the others. I mean, it's a great problem to have, but it's just kind of the way it works, because you can quickly overfill your pipeline and just have a lot of deals. But it's great when you have 5 to 10 deals and you can cherry pick and say, okay, great, I'm going to focus on these three because they're the best return. I think they're going to sell the quickest or whatever. And then you can use it as leverage with your other offers behind it and say, hey, I've got, people that are willing to sell their property for this, cost per acre. Are you willing to deal with me? Otherwise, you kind of got to hang on.
So how many deals are you like actively pursuing now? Like, let's say 2025, given calendar year, like, and then also a secondary question, let's say I got into this and I started with whatever, 5, 10, 20 grand. How many deals am I going to need to be doing per year for this to be like a profitable business that I can live off of?
Well, there are the fun variables to get into. So us personally, we do probably 4, 5, 6 deals a month.
Okay. So you're probably not doing the $2,500. It's just not worth it anymore.
Pretty steadily. Yeah. And so very quickly in our pursuit of land, the early years, we did some deals where we were buying properties for $500 a month or $500 total or $1,000 total. But very quickly we realized it's the same amount of work to buy and sell those properties as it is to do a $10,000 or $15,000 property or 20.
Because you got to do the deed search and you got to
It's
do
all
the
this,
land transfer, and it's just like
the
a pain.
workload is the same. But on top of that, the clients that you deal with that are buying $1,000 properties versus others are vastly different, right? So there's a lot more trouble on the low end. People don't have money; they can't make a payment. Hey, can you? Whatever. People that have bought, typically on average. I mean, this is a blanket statement, so it's obviously not true across the board. But you deal with a different clientele, and so we quickly shifted into a different market. Now, in the market, there's also a sweet spot. I mean, if you think about, let's just go extreme. Let's say you're buying and selling 7-figure properties, $1 million, you're selling it for more. The market dynamics are totally different. And so you just can't expect the same business model to work here in a certain pocket that's maybe, let's just call it sub 50,000. People are a little more willing to deal with you. Your buying pool is bigger. And so once you get above 6 figures, the dynamics change a little bit. But at the same time, if you're dealing with a $200,000 property, you don't need 50%. You don't need to buy at 50%, below market value to net a decent margin.
I see.
But it might take you longer to go full cycle on it. And so there's a bit of a trade-off.
There's, of course, more capital also tied up in that project.
Exactly. And so if it's a bit of an equation on, do you want to make your money work faster at a certain level, or is it more lucrative to trade up at the higher end, but it may take longer, and your capital, like you said, is tied up unless you have access to partners or liquidity in some way or something. And so all these factors come into play when we deal with clients. I mean, every client we start with a strategy session where we sit down and we say, okay, what is your goal here? Are you side hustling? Are you wanting to replace your income? If so, what is that? And all that goes into understanding what type of properties should you target? Can you target? In that, then, we build that out into a business plan and say, okay, let's go after these types of properties. we can backwards engineer. Let's say you want to make $10,000 a month. We can backwards engineer that and say, okay, you need to be doing this many deals per month. If it's different, if it's cash or terms, right? If you're doing, you can do one deal every month for where you net $10,000 profit, or you
Right.
can do, 4 deals at 2,500. It just kind of depends on the buy box of the person
Mm.
and the goal. And so that's fundamental to how we start out with every client. And it's why, there are other coaching programs out there. They're very cookie cutter. Like, this is the business model, use this business model, but life's just not that way. I mean, everybody comes with their own. Some people have 2 hours a week to work on this business. Some people have 20 hours a week to work on the business. Some people have access to $2,000. Some people have access to $200,000. And so that's where the fun part comes in for me, at least, is in customizing a business plan to get somebody ramped up as quickly as possible.
Mm. So talk me through kind of the process, right? I get it. We're sending out some amount of letters. Well, go one step back. How are you finding markets?
Well, kind of as I touched on in the beginning, what we do is we look at what's the buy box. So do you have
I got it. Starting
$200,000, or
with
do you have
cash. Yeah.
2,000?
Yeah.
And there are different markets with different price ranges. I mean, if you think about Aspen, Colorado, you're not going to touch any vacant land there.
Yeah.
Versus Luna, New Mexico, that you can find little 1/10 of an acre parcels for $250, $500. And so that's our starting point, is kind of, okay, what do you have access to? Then there are some tools and online sites that we use to get market intel. And so we'll look at how much supply and demand is happening. And so there are some counties where the properties just don't, there's one transaction in a year, or things just don't move all that much. And then there's others where properties are flying. And there is also in there's a little bit of a sweet spot. You don't want too little transactions happening, because obviously it's just going to be hard to sell properties once you get it. There are also counties where there's a lot of competition, and it may or may not be the right move to get into those counties. There's another layer of research that goes into looking at who are those people doing the transactions. Like, there is competition in the land business. There are other businesses like ours that do this. It's nowhere near the scale of house flippers or wholesalers.
I get those texts and calls basically every day.
Right. And so, for us, it feels a little crowded at times. And there are markets where I know I'm not even going there, because there's a ton of other people. Half of them don't know what they're doing. The market dynamics are flipped upside down because they're making crazy offers, or an owner reaches out to me and says, I got 12 offers. The highest one is this. Can you beat it? And that's not the game I want to be in.
Yeah. 12 is too many. Yeah.
And so, it's unhealthy. And so we have a little bit of market insight in that way. And so we help steer people into different markets based on that. But essentially it comes down to that. It's like, what's your affordability in terms of being able to buy and sell properties? And what's the health of the market in terms of the supply and demand dynamics? And that generally steers us. There's a few other things, like some counties are easier to work in than others. Some are totally online. You can do everything. You can research
look up the
properties.
GIS and everything.
Yeah, exactly. The mapping and all of that. Some states like Texas are non-disclosure states. They don't disclose sales prices. Others is an open book. You can see, hey, this property sold 2 years ago for this amount, or other things. And so there's some factors. We've worked in Texas, West Texas counties where they don't operate online. You have to physically mail in the deed or show up at the clerk's office or something. It's like, okay, well, that's, we cross that county off. So there's a few other factors like that help go into what makes a good market. And so that is step one, really. After setting the strategy, it's like, okay, what market or markets are we going to play in? And, if possible, it's best to test out 2 or 3 markets and see what the response is going to be when you send out a few tester campaigns until you find one that you want to go deep in.
Let me ask the really stupid question. How much opportunity is out there still in this field? Do you just feel like, oh my gosh, this is amazing, I can't even believe other people aren't doing this? Or are you like, it's getting tougher and tougher?
It's still wide open. I mean, there were millions of vacant land transactions last year alone. and there's just 1% of the competition that there is in other real estate ventures. And so, I mean, we work with dozens of clients. They almost all have success in, right. They send out campaigns. They have more deals than they know what to do with soon. And so it's still wide open. It's all about perspective. And so my wife and I have a perspective of 10 years ago, and things were fundamentally different than they are today. And from my point of view, okay, there's more competition. We still have more deals than, we can do. If we tapped into, credit, we would still have more deals available to do than we can do. And so it's right now it's still a wide open space. I don't see it closing down any, because I mean, there's development happening, but nowhere near the amount of vacant land in the United States. It's in every state. It's in every county. You can find buyers for every property type. There's people that want to be urban. There's people that want to be rural. It's just land is a scarce resource, but it's not anywhere near that level of scarcity yet. So it's still a wide open market.
What are the buyers typically doing with the land? What have you gotten a sense of that?
It depends on the type of land that you're going after. Mm-hmm. But most people there's 2 or 3 categories. There's people that want to build. We've had a few people that have bought properties, and they've gone on to build little cabins or something. A lot of people want to put a mobile home or a place that they can get away from. Some people look towards retirement if they want something down the road. Some people, there's preppers out there that want just off-grid property that they can bug out to if the end of the world and the zombies come. Mm-hmm. There's just, different buying types, but there's also infill lots, right? People want to build a home. That's a healthy market. I know a lot of people who form partnership with developers, like they know home builders or developers, and they have a ready-made buyer. And so then they're able to go, okay, I know they're looking in this general area. They know what they can pay. Lygia, my wife, and I have tapped into here in the county over next to us. There's a development project happening. And so we know some contacts at the city, and they've kind of given us on a map. They say, yeah, we're looking for property in this area. If you find it, we know what they'll pay for it. And so we're able to then negotiate if we find an owner that. And so it's the same thing with, subdivision. If you think about Pulte or Newmark Homes or somebody that's building homes in an area, they're looking for land. They're looking for the ability to expand. So it's generally those types of buyers, at least the ones that we deal with. We deal with just a lot of, it's a B2C type business. We're dealing with consumers that just want a piece of property.
Okay, so we find an area that we like, where we think we're going to like. We send out some test flyers, or we send out some stuff. Okay, then what happens? They call your cell phone and say, hey, you sent me a flyer. I want to sell my house, or sell my land. Sorry, no houses, right? So is that how that goes?
Yeah. So when we send out a letter, we give them a phone number, an email, and a physical address.
Okay.
That we have, and we just have a business. We have a business line that people can call. We don't answer it typically. It goes to voicemail. Email inbox is the same. It's just the nature of this business. And honestly, it's a signal of doing things right if you have angry people getting back to you and saying, how dare you send me an offer of this? My property's worth way more than that, And so we let them vent on the answering machine, and we don't need to call them back or anything.
Sure,
but
you've
other
gotten
people,
some legendary voicemails.
Yes, we do. You get people that take the time to actually get your letter, write you some hate note on it, and send it back. And anyway, it's just, that's the world we live in.
Okay. So then you send out this campaign, and let's say, 7 days, 14 days, what's the response time like?
Yeah. Typically it's a bell curve, right? You get some early responders early. It can be days, honestly. I mean, sometimes the mail goes really quickly and people get back. Then there's maybe that 2 to 3 week to 4 week period where you start to see your bulk of things. And then there's a long tail. Like we have people that call us back 3, 4, 5 years, like And sometimes they've gotten, because we'll remail to certain areas and they'll be
Yeah.
like, hey, I've been sitting on your letter for whatever, I'm ready to sell now. I've whatever. They life circumstances
Yeah.
changed. They have us on their desk or something, and they're able to call back. But yeah, there's typically that, I would say 7 to 3 or 4 weeks, 7 days to 3 or 4 weeks where people are coming back. Our initial response is thank you. Let us take a quick look. Usually we'll ask a few questions, just, build some rapport with people, understand their motivation a bit, like, what's going on. People are more than willing typically to tell you their life story or what's going on with the property. And so, we get a little bit of insight there. And then we dig in. Our first step is typically to revalidate the pricing, because sometimes we send these out in bulk. And as you can imagine, in a county or even a submarket, there are pockets of where, or even let's just maybe go extreme, there's a lake, and you have a lakefront property versus something that's farther away. And so we'll go in and revalidate the comps just to make sure, because when we send out offers, we aren't looking at every property and fine tuning the valuation. We're trying to get a rough estimate and
So does
send
that
them out.
letter say, between 3,000 and 6,000?
No, it's an offer,
Okay.
but it says it's contingent on our due diligence process. And so, a lot of, and there's also a little bit of a, if you get back to us in later than 30 days, we reserve the right to, refine the offer. So there's a few caveats in the letter that give us the opportunity to kind of come back and negotiate. And so we'll go back and revalidate the price. We'll do those things that I talked about a minute ago. We'll look for the red flags. We'll say, does it have legal road access? We'll do we'll call the clerk and say, hey, I'm interested in buying this property. Do they have any back taxes? Are they liens on it? There's some online tools that you can use to also supplement that search and find some things out. So it's a really basic, quick process, or it can be. And then we'll either decide that we need to renegotiate with somebody and say, hey, we looked at your property. It's got a crack across the middle of it or something. We can, we're going to bring down our offer, or we just take it, and then we start the process. And that's where we typically put a purchase option down on it. We say, hey, let's, sign a contract of agreement that kind of sets the tone for the deal. We agree we're going to pay you this price. Give us 30 days to get the closing done. We agree on the closing terms. We're either going to do it ourselves, or we'll employ a title company. All those things are negotiable with people, right? It's different ways. And so that just starts the process. And most of the deals that we do today, we will leverage a title company. We'll just, we know people, we have good relationships. There's a healthy enough margin that we can absorb the cost. Usually it's split 50-50. There's prorated taxes in there. There's a few things, but it can be hard to get someone, because the way we typically would do it outside of a title company is you sign over the deed and we'll send you the money. And so there are people that get unnerved by that. They're like, I'm not doing that. So title companies serve as an escrow where they hold the money in the middle and they do all the stuff around it, and then they release the funds. And so it just gives a lot more peace of mind. But for deals that are, I don't know, $4,000 or $5,000 or less, it can really eat into the margin. And so that's where just being able to self-close, we can do that for less than $100 typically. And it's very quick and painless, but there is that factor. And there's some workarounds. I mean, you can have mobile notaries serve as a little bit of an escrow where, until when they sign the deed, they hand them the check, or there's different ways to make things work. But that's kind of the process of the transaction. And there are other ways that can even work. That's just our model, and that's largely the model we teach, is buying the property and then reselling it. But just similar to the home business, there's other ways to put it under contract, to put an option down, then to work on the sales side in the background, so that you already have a seller or a buyer arranged before you close. And you can do it such that you don't even put any capital into the deal if you arrange it. It's just a lot more legwork to get things going, and deals fall through. And a lot of people like it because they don't have capital to do it. We have the capital to do it. It keeps things clean and easy. We just keep the machine moving in that way. And it it runs a lot more smoothly than having to worry about, okay, I got a buyer. Are they going to back out at the last minute, or all the different things that go into that? It's a workable strategy, and a lot of people employ it. It's just a bit trickier to make happen.
How are you deciding on purchase and sale prices? Like, where is that? Is that coming from like auditor data? You're looking around. Do you have some secret system to, I bought this property. I bought it for 20 grand. I think the price is 40. Like, how are you figuring that out?
Yeah, it's comps. It's basic comps, and in land, it's not as complicated as with homes. But the gold standard, or ideally, we get sales data. We look at recent sales. Have properties been bought and sold for a certain price? We average things out over some amount of time. If not, you can find active listings, which are a little less reliable because somebody's hoping to get that.
They
But
haven't sold
if
them.
you get it, if you get enough of them, then it looks like kind of the market's in there. We talk to realtors a lot. Like if we're in a market, we'll tap into realtors' knowledge bases. They're typically more than willing to give you market analysis on properties or submarkets. They're amazing sources of information to help go through realtors. We have leveraged them a lot. They typically know the nuance of a submarket. Like, hey, properties down here in the south part of the county, they move more slowly. They're hard to get to. Over here, they're better, and so you can tap into a good knowledge base there. But yeah, the comping is it's math. Some people are a bit spreadsheets, math, all that kind of stuff, but it's not that hard. There are more and more tools that there's some land specific tools that aggregate a lot of that data.
Mm-hmm.
I'm okay with using that at a surface level, but unless I fully understand how they're developing their pricing, I have to do it myself. Like I have to go in and do it, especially it might be okay when you're putting offers out and you haven't really committed anything yet. But once you get, to a transaction, then I want to make sure that I understand what I'm buying. And, fortunately in the land business, or unfortunately, there's such a margin. Like if you're buying something at 50% or less than value, there's a lot of room for error. Like you have to grossly miscalculate something to make a mistake. And so there's just a lot of, it's another reason this business is a great business. You can afford to make a lot of mistakes and still make a profit. Whereas, if you're in a different business or venture where the margins are really thin, it can be catastrophic to make a mistake. So it's just a good reason that this is a great side hustle or a main business. It can also lead to bad business practice because you can be really sloppy.
Oh, really?
In your business. Yeah. if you have a lot of margin, you can maybe not be as mindful of your expenses. And so that can ultimately be a bad thing if you get a little too bad about it.
Okay, then talk me through the sale process. What are we doing to sell the property? We just
it's very similar. So
Zillow, your LoopNet, or whatever it is.
Yeah, there's broadly 3 channels. So there's free channels. You have Zillow. We use social media a lot. Facebook Marketplace is a huge marketplace.
Really?
There's
People
a
are
lot
buying
of
land on Facebook Marketplace?
People are buying land. We have probably sold 80% of our land deals have gone through Facebook.
Oh my gosh.
It's an incredible marketplace. There's the broad marketplace, but then there's also local buy sell groups. And so if your property's in North Carolina, there's a bunch of North Carolina buy sell groups that you can tap into.
Oh, I see.
And other things like that. We never had luck, but I know a lot of people who had good luck with Craigslist. They have very similar setup. You can have the local marketplaces. I know people that have sold properties on eBay in an auction type environment. There's just a lot of free channels out there.
Got it.
Zillow being probably the biggest one, and Facebook. Then there's commission based, right? You can tap into a realtor, which is a great way to do it because you're no money out front. Only if they sell the property, they're getting paid. They do the legwork, right? They put it on the MLS, they take photos, they put a sign in the yard, they deal with the clientele. And so it's worth its weight to be able to do that. Then there's some paid channels. There's some land specific sites like land.com, Landwatch, Land and Farm. You can pay to advertise. People are going there to look for vacant land. And so it's another way to go. but it's also a big expense. Like they're not cheap, those services. They also have like a tiered structure where if you just buy the basic package, you're not getting promoted. If you buy the platinum package, you're getting to the top of the list or what, so all these things that you're probably a little familiar with in terms of like ad searches and product placement, and it comes in more into play in the paid sites. But we've used them and successfully, just a little bit less so. And so there's different channels to market the property on. And then it's a relationship game, right? People reach out, hey, I'm interested in this property. As you can imagine, there's a range of consumer behavior. There are people, we've sold properties without interacting with a person. Like they've literally bought off the website and didn't want to speak to anybody, and just we've done the transaction, all the way over to there's people that there's no amount of proof in the world that you could convince them to buy your property, right? They want to see your LLC paperwork. They want to, all the stuff. And so there's just a range of all of that. But we try to make it as easy as possible. And, it's over time you learn there's just people you want to deal with. And there's other people that you're like, okay, this likely isn't going to work out, or this isn't for you. Let's both move on and do things. But that's generally it. And then the sale works similar to the acquisition transaction, right? Where when we sell property on terms, we typically do it such that we don't transfer ownership until they're fully paid off their property.
I was going to ask how often you run into challenges with that seller financing thing.
It happens. It's single digit percentage. I mean, it's low. We've probably done more than we should have over time, but we work really hard with our clients. Like it's hard when somebody's paid $10,000 or $15,000 and they run into trouble. It's hard to be that slumlord or whatever that just says, hey, you missed a payment, you're out.
It's my land. You take the land back, you take all the money,
and we resell it. Yeah. And so we have that happen. But we typically will try to work with people. Like if they need to pause their loan for a month or two, we'll typically allow that grace. If they want to, refinance the loan somehow or something such that it works out. I mean, people run into trouble. It's a fact of life. And, but at the same time, it's a real conversation. Like, is this something that's just going to cause more trouble or not? But it really minimizes. Like, we don't have to foreclose. We don't have to do any. We don't have to pull back the deed somehow or whatever. And so it keeps it clean.
Well, hopefully they haven't built a house on the land or anything.
Yeah, we don't allow any development on our properties while people are paying on it.
That makes sense.
Some light development, like if they want to put a fence or smooth out a driveway or something, we typically will do some of those things, but it's a liability in terms of us being the owners. And so, that's that side of things. Or there's a cash transaction, and most of these things happen the same way. We buy the property. We have relationships with the counties. There's services where you can electronically file deeds and paperwork and do things. Or if people want to go through a title company, we can go through a title company. They get title insurance, the things that come along with doing that transaction in that way. So that's kind of the two broad avenues that we see on the marketing and sales side.
This is so interesting, man. I love this. This sounds like a great business. You're selling.
It has been a lot of fun.
You're selling me.
It's a great thing. I mean, but you have to be committed. I mean, I see people come and go, and they're just not. It is an active business. It's not passive. You're not making a passive investment in a syndication and just putting your money in and watching it work. There's some work that has to happen. We do leverage systems and resources. There are, a lot of the work can be menial. Like you can pay a VA, a virtual assistant, or somebody to do some of the work. I like to have my hands on the research aspect of things. I don't really feel comfortable outsourcing that. But there's systems, like we use a mailing service. All we have to do is send them a spreadsheet, and we can tell them, hey, send 200 a week off of this list, or send it all, or whatever. And they do a lot of the lifting on that side. We leverage a lot of the realtors and title companies to do some things is kind of the way we minimize our touch points into the business. But when we started, we were 100%, fingers in all the processes and doing all the things. And that's the way I recommend any business owners start out, so that you know what's going on before you hand it off to somebody. But yeah, it's a fun business. It's a lucrative business. Similar to how we started, most people start safely or with a modest budget. You can build it up fairly quickly. Go at your own pace. Side hustle if you want $1,000 a month, or go full time if you want 25,000 a month. It's kind of a way to. There's so many ways to go about doing it.
Okay, I got 2 final questions. One, do you ever go, I got to keep this property, I love this thing, maybe I'll spend some time here?
Yes. Selfishly, we find some really good deals. So maybe 5 years ago, we bought a property in Colorado. It was up at about 11,000 feet elevation, really up high, beautiful flat property, pine trees all around. We loved it. We camped on it a few times when we went out there, and we had the thought that we would build a second home or a cabin or something on it. But at the time we were growing our business, we didn't even have a primary residence. Mm-hmm. And so, my wife and I had the conversation. We said, let's just put it for sale at a ridiculous price. And if somebody buys it, no harm, no foul. We got a great return on it. And, if not, we hold on to it. Sure enough, somebody bought it really quickly. My wife, she was crying. She was
man, you should have went higher, right? You're like, God, I thought I
exactly.
was way at the top.
Yeah. But yes, we have it. And it's hard to hold on to properties when you can make so much off of it. But I keep an eye out for me, mostly larger tracts, 40 to 100 acres. I'd love to have, property like that, a spread somewhere.
That'd be beautiful, man. All right. Last question. What was it like doing Leadville? You want to tell people a little bit about Leadville and give us the rundown?
Yeah, Leadville's been my white whale for a while. Since I moved here, I was kind of taken by Leadville. It's the highest incorporated town in the U.S. or in the continental U.S. or something. It's up at a little over 10,000 feet elevation. We happen to live at 10,000 feet elevation, so that for me is not the biggest challenge.
Good training, of course.
It is. It's nice to be able to train, but so for, they have a lottery system. You don't just sign up and go. You have to put your name in a hat and get fortunate enough to get drawn. There's a few backdoor ways to get in, which I took. It's just a grind. It consumed me for the last 3 years in terms of, getting out, training, running longer distances. It still calls to me a little bit. I didn't finish last year or this year when I ran. I'm old and slow. So the time cutoff got me at about the 40-mile mark, and my day was over. But I was beat up.
Do they progressively do a time cutoff? Like if you're not to a certain point, or is it all just the end?
No, there's progressive checks along the way. So every, there's probably 6 interim time checks.
Okay.
And it gets a lot of people. And so anyway, it still nags me a little bit.
Well, hey, man, if you can get the pass to go again, right? That's the challenge. It's like, I might not.
The challenge is getting through the lottery. Like I said, there's this year, the way I did it, there's something called the Lead Challenge, where if you sign up for 5 events, a marathon, a 50-mile, 100-mile bike ride, and there's a 10K in there, and then a 100-mile run, you're kind of guaranteed entry. It's a pricey way to get in.
I was going to say, do you have to actually do the events, or
so you have to start each event to be able to get to the next event? You don't have to finish, but you have to start. And so, but it's a lot. I mean, Leadville's about 2 hours away from where we are. It's a journey. It just, bless my wife's heart for putting up with me and doing all that stuff and being my crew chief. And
she's like, just go for a run around here. Like, we already live.
I enjoy that a lot more, quite honestly. Now, it's hard to do. It's hard to see if you can do 100 miles, which is kind of what calls me a little bit. You can't really unsupported do that too much. Yeah. But I just step out the door and run now. It's amazing. And I enjoy that so much more because I can stop and admire deer that are just there or something. But yeah, Leadville's no joke. It's doing
a 100-mile run anywhere. I don't care if you're on the flattest flat ground, the coolest weather. Like, I actually just saw, this was silly. This happened in Columbus. It went like kind of mini viral. this guy said he and his friend, they like left a bar at like 1 a.m. and they like started walking. They were like, we're gonna walk home, but then they like went the wrong direction, and then they just like made it like a tough man contest, and they walked like 25 miles home. They like got home at like 10 a.m. the next day.
Yeah. Two guys walk out of a bar,
And
and
they were
yeah.
like just in like regular shoes. They were not
Yeah,
really.
yeah.
I mean, but dude, if you don't think that walking 25 miles is brutal, go do it and then come talk to us. Like, let alone running
Exactly.
25, let alone running 50, 100.
No doubt. Yeah, with cushy sneakers on and stuff. Yeah.
Yeah. Well, Mike, this was
It's
super fun, man. Tell people where they can find you, and you do the coaching. So if somebody hears this and goes, "Damn, I need to get into this," where can they find you for that and all things that you're up to?
Yeah. So our website is flippingdirt.us. If you go to flippingdirt.us/freedom, I try to make that a one-stop shop. So it has my email address, it has a phone number, it has some collateral. Like I wrote a book not too long ago. You can get a little more detail. It's a one-stop shop. So if you want to talk to me in person, you can set up a call to talk. If you just want to check out some resources, you can check out the resources. But flippingdirt.us/freedom is the place I try to steer most people in. They can then use it however they want to.
Beautiful, man. Thank you. This is cool, man. This is a great business, and I didn't know
check it
anything
out.
about
Give me a
it.
call.
So yeah, I'll let you know. I'll let you know, man.
For sure.
Thank you, Mike.
Well, this has been fun.
Appreciate you, man.
Yeah, likewise.